Airbnb, it's another Q1 beat. That's fantastic, right? Well, the guidance, not that fantastic, actually. And that's what's really been playing out, just as I said on the macro minute. It's down about 10% right now. Last I looked, as a matter of fact, between 103 and 170, that's the 52-week range. Here we find ourselves close to about 145. Strong internationally, that's great, but the spending is coming down. They're slowing as we get closer and closer to summertime. That's not so good. And then you talk about slowing. How about the slowing growth? This was the slowest growth that they have had at Airbnb since the pandemic began. So unfortunately, this is a stock that's getting beat up pretty good today, despite the fact that they beat on those earnings.
Of course, as you point out, classic case of the beat and then the guidance taking the stock down. But this is one, for our loyal listeners and watchers and viewers, this is one I've been fairly bearish about for a while now, and it's because of regulatory headwinds, something that we're not seeing talked about a lot by the street in this story. And what am I talking about? Town by town, city by city, little by little, regulators are encroaching, limiting, restricting, probably is the best way of putting it, Airbnb's business, right? Because, of course, it takes away from local hotels and other hospitality, basically saying you can't be an Airbnb host in these different parts of town. We're seeing it in places like New York City. That's a big drag, as well as with the anticipated decline in consumer spending. It may well be, as I said in the cold open, a cruel, cruel summer for Airbnb and its progeny.